Yeah. Yeah, can we start?
Yes, ma'am, we can start.
Okay. Good afternoon, everyone.
Ma'am, give me some time. Women today are empowered and confident. There cannot be just a day to celebrate women's struggles and achievements. Every day, we should respect the dignity of women. Today, women rule almost every field of life and work at par with men. International Women's Day is celebrated on 8th of March every year to honor all the women in our lives. The day is particularly observed to acknowledge the achievements of women in various aspects of life. In order to celebrate women, we have organized our fourth workshop series in Women's Week on perspectives under IBC, where all the women speakers will share their life experiences and the challenges faced by them as a woman and they have overcome those challenges. Today, we have with us Miss Anantha Lakshmi ma'am as a speaker. She is practicing chartered accountant and registered valuer. She is having a rich experience in sectors such as IT, real estate, hospitality, pharmaceuticals, and investment banking. Ma'am has worked in various corporates at senior management level. Her area of expertise includes valuation, statutory audit, tax audit, insolvency resolution process. Now I request ma'am to share her journey being a woman in corporate world and thereafter she can take up the session. Over to you, ma'am.
Thank you so much. Hi, everyone. It's good that we are meeting this afternoon to discuss on this valuation. Before that, since it is a week, it's a Women's Week, I just give few words on that. Thing is that really we have to be happy. I'm happy to be a woman because here, if you see more than earlier years, now we have very good exposure, very good support from people around us to take it forward. It was not the thing which was earlier. So I really thank everyone who supports me to take it up the task and other things. I feel really proud to be a woman. Thank you. Now we'll move on to this valuation and we will see we have certain agendas. We will see what are the things which we have to do and what we should not do. Those things we will be discussing in detail in this session. Okay, before starting up this session, I just want to quote few words given by Ashwath Damodaran. Ashwath Damodaran, as you people know, he is the father of valuation. Okay, thing is that he has given a statement stating that valuation that is not backed up by a story is both soulless and untrustworthy. And remember that stories are remembered better than spread wits. Is it really true, right? See, whenever evaluation is done, it is not just numbers we do. We need to understand every profession for that matter, every activity for that matter, we have to understand and we have to do. Here, valuation is not just numbers, taking numbers, projecting and doing some arriving at some number. See, why I arrive at that number? Is there some justification on that number? Is the one which we will be looking into. So what he says is that if it is not backed up by a story, here story means the story of the business, story of the industry, story of the economy in which we are. It has to reflect, the valuation needs to reflect that. That is what it is expected. It is not the story of a cinema. It's a real story of the company, industry, and the economy in which we are. So it is done in a spreadsheet, but it has to be a story which is real, which replicate the status of the company in reality. So based on that alone, the number needs to be arrived. Okay. Now we'll just see what is the agenda of this session. First thing we will be talking about IBC regulation on valuation. Then what about this accurate valuation? Why this accurate valuation is required? Few things on that thing. Then valuation and some cases on this valuation related to valuation. Those things we will be seeing. And the next thing is that we will be pitching on the valuation process by RV under CARP and liquidation. And the last thing we will be discussing thing is that the practical issues and whatever the recommendations we have received from IBBA and other people have been incorporated there. Okay, first thing I'm just starting with IBC regulation on valuation. I will not go in depth with each and every regulations or the code because you people are well aware of that. Just a recap of that will be done by me. Okay, first thing is that we will talk about this regulation. We have two main things, right? CARP and liquidation. See, the first thing is that we'll start with CRP because in both the cases, valuation is required, right? See, first thing, what this regulation 27 says, it says that every CRP requires an RP or an IRP as a situation may to appoint two registered valuers. Within what time? Within 7 days of his appointment and not later than 47th day. That means the maximum day permitted is 47th day of CRP. Okay, between this time, RP or IRP. Generally RP, but in case required, IRP also will be doing the work of an RP, right? In that case. So 7 days to 47th days. The floor is 7 and the cap is 47. Okay, that is there. It says the registered valuer needs to be appointed. And the second case, as I said earlier, sometimes IRP will play the role of the RP. In that case, IRP will play the role of the RP from which day? From 40th day. That day onwards, then he will be taking up this appointment and other things, and he will be taking care of the appointment and other work related to registered valuer. Then any other cases, independent expert is required. If you see, you would have come across the word undervalued transactions. Perfect. Preferential, undervalued, fraud, extortionate transactions are there, right? In that case, adjudicating authority, NCLT, may at times require an independent expert to ensure that there has been an undervalued transaction. Since we are talking about undervalued, I'll just say this few words on this undervalued. What is this undervalued transaction? That means a company, if they have to check whether the company has entered into some undervalued transactions. What is that? We know the company is in severe distress. In that case, what they can do, they can give somebody, okay, which is not warranted, or they may sell some assets at a lower price than its value. In that case, from their books, they are moving their thing to another thing, and they can gain advantage from them. So that is called undervalued. In that cases, that is adjudicating authority may appoint an independent expert to value the actual value of the concerned transaction. Then coming to then another thing is that Regulation 35 of the CRP regulation states that two registered valuers are to be appointed, which you are very well known. And if the two estimates of the value in asset class, I'll just explain in detail what is this asset class. In an asset class, or significantly different. Okay. Or on the second scenario, the first thing is that the two registered valuers are to be appointed. The second scenario is that if the two estimates, what is the value report given by the registered valuer are significantly different in that case. Or another scenario is that on the receipt of a proposal to appoint a third registered valuer from COC, this is newly added one. This has been added from June 2022 onwards. This provision has been added. Now, what has happened is that COC can recommend for the appointment of third valuer. Apart from significant difference, he has the option to appoint the third valuer. Okay, for an asset class. I'll explain in detail what is this asset class and what does it consist. Then now we will see the significant difference. What is this significant difference? If the valuation has come, how do you say this has a significant difference? Earlier, it was not defined. Then later, it has been amended and they have given an explanation for this significantly different. Means, what does it mean? The difference of 25%. In what value? Fair value or liquidation value? They have specifically given that in liquidation value alone. If the difference between two registered valuer with regard to liquidation value has a difference to an extent of 25%, more than 25% under an asset class. It could be land and building, plant and machinery, or SFA. In that case, the first point is that there should be the liquidation value and the difference is more than 25% of a particular asset class. In that case, we can go with the third valuer, and they have given a formula, nothing but higher valuation minus lower valuation divided by higher valuation. L1, L2 divided by L1. Okay. So if there is no difference, then what we will do generally, what will be a number for valuation? It will be the average of the first valuer and the second valuer. These things are very well known to you. I just given a small example. Mr. A and Mr. B values liquidation value at 150 and 300 respectively. Now we have to see what is the difference in percentage. If we apply the above formula, then the percentage comes to 50%. Then in this case, appointment of the third valuer seems to be mandatory. Then the RP, you people needs to appoint an registered valuer, third registered valuer to get his number. Now what we have seen is regulation 35 of CIRP process. Now we will see the regulation 35 of liquidation. Here, this liquidation is there, fast track regulation 34. These things also together. What does it state with regard to liquidator? It states that liquidator shall consider the average of estimates of value arrived under those provisions for the purpose of valuation. See, if after CRP process alone, liquidation comes into picture. So the option is given to the liquidator. He can go with the value which is arrived in the CRP process. It is not mandatory for him. He can have the other option also. Okay, if he feels that valuation is not right, or if he feels the time involved is more, so we need to require fresh valuation, or there is change in the industry, economy. In that case, if he feels it is in his hand alone, at his own option, he can choose to have another valuer. In that case, within 7 days of liquidation commencement date, he need to appoint 2 registered valuers. Okay, that's a general thing which you people know. We'll move to the next thing. Then few more things is that you people also know who need not be appointed as a registered valuer. With regard to CRP and liquidation, one and the same. Relative of the resolution professional? No. Related party of the corporate data? No. And auditor of the corporate data at any time during the 5 years preceding the insolvency commencement date. Kindly be ensure in CRP as well as liquidation, same words. It's not insolvency commencement date alone is given for liquidation. It is not liquidation commencement date. Okay, and the last category is that a partner or director of the insolvency professional entity of which the resolution professional is a partner or director. These people cannot be appointed as a registered valuer of a corporate data. Okay, now we will move on to this valuation and we'll see the classes, and we will see classes, what the class contains and what are the details as an RP you need to provide to the registered valuer to execute this valuation. Okay, the insolvency professional should identify, this is the first work of yours. Then once the financial statement comes, you will be, after obtaining the financial statements, after the basic details you have obtained, you will be studying the financial statements. What you will be studying with regard to valuation is that what are the assets it comprises of? Whether it has land and building? Yes. Plant and machinery? Yes. Then next thing is securities of financial asset. Now you have to see in which bucket it falls. Whether it has comprises all 3 buckets or only 1 bucket or 1, 2, 3. So either combination is permissible. So this first thing is that insolvency professional decides with all 3 classes are required or 1 or 2, whatever be, he will be deciding. Then he will be appointing. It is his responsibility to appoint the resolution professional. Before going into detail of that one, we'll just see what does this asset category comprises, non-current and current assets. I'll just run through because this is not very material here. PPE, right to use assets, capital work in progress, intangible assets, financial assets, investments, deferred tax assets, Other non-current assets. Coming to current assets, inventory, financial assets, trade receivables, cash and cash equivalents, bank balance, others, other current assets, or other current assets it has. Now we'll move on to the what is the category which is required with regard to land and building. Land is covered there, building is covered there. Not only these two are covered. Suppose if there is capital work in progress in related to land and building, that is also needs to be covered under land and building. Apart from ownership, another thing is right to use is also covered under land and building. Then similarly for plant and machinery, furniture and fixtures, office equipments, vehicle, capital work in progress related to plant and machinery. Again, right to use is also covered under plant and machinery. Securities, SFA registered valuer, what he will be concerned about non-current investments, deferred tax asset, other non-current assets, inventories, trade receivables, cash and cash equivalent, bank balance, other financial asset, current assets, and other current assets will be, he will be concerned, he will be valuing these things. Okay. With regard to inventories, always sometimes a question arises, whether it needs to be done by an SFA or it needs to be done by a plant and machinery registered valuer. Why this question arises? In this case, because sometimes inventory or general inventory, or sometimes the inventory requires technical know-how to understand how to value this. In that case, this from SFA, the inventory will move to plant and machinery based on the requirement. Based on the requirement of valuing this inventory, it could be under plant and machinery or SFA. So RP, while delegating this valuation, he has to, sometimes he may not know, but he may take the advice of the plant and machinery registered valuer or SFA registered valuer to ensure whether they can take up this valuation or it has to be moved to the other person. Okay, this IP has a major role here. What is that thing? Should study the balance sheet. Then the valuer should be appointed, keeping in view the nature of the business. What is his nature?
Namaskar. Bola. हाँ.
Yeah.
हाँ बोला.
Okay, I'll continue. Nature of business we need to see. Nature of assets held by the corporate data. First thing is that before appointing.
सर्व्हिस टॅक्स नंबर आम्ही काढलो होतो तुमच्यासाठी. बर.
Madam, can you interfere?
Mr. Sujit, you are on. Please mute your mic.
कुठल्या बऱ्याचशा म्हणजे कुठला कंपनी?
Mr. Sujit, unmute.
हाँ हाँ. पॉवर. नाही पण मला आठवत नाही मीच आम्ही काढलो होतो का?
Ask the host to mute him.
हा पण तुमचं त्या कंपनीचं नाव काय?
Mr. Sujit, mute your speaker.
आयडियल इन्फ्रास्ट्रक्चर म्हणून नाव होतं. बर. हा.
मिस्टर सुजित मनाजी.
मला काय आठवत नाही की मीच काढलंय असं.
मिस्टर मनाजी,
म्हणजे आता आपल्याला काय करायचं?
प्लीज म्यूट युअरसेल्फ मिस्टर मानजी.
हा. नाही कारण हल्ली मी तर सर्व्हिस टॅक्स बघत नाहीये.
We may request the host to
मला
mute him.
म्हणजे लक्षात सुद्धा पण येत नाही.
Mr. Sujit.
I'll call her.
Mr. Sujit, please mute, no?
Yes, you can intimate the host, please.
सहा.
Sure.
Sir, I am trying to mute, but there is some.
तुम्ही माझ्या ऑफिस मध्ये आलते, कंज मध्ये आलते का तुम्ही?
Ma'am, I think now.
Yeah, it's fine now.
Been
It's
muted,
fine.
so you can start. Sorry for the problem.
Okay. Now we'll see what are the information that is required from an IP to be given to the RV to take up.
Can I interrupt here one query regarding appointment of valuer? Basically, this is as per the IBC regulation and the code, it is the duty of the RP to appoint the valuer, isn't it? Am I correct?
Correct.
But in most of the cases we see as an agenda item for appointment and remuneration of valuer in the COC meeting. How it is going in the COC agenda, I don't think, understand. Because it is the prerogative of the resolution professional to appoint, not the COC.
Okay, you're 100% correct. Here, there is a demarcation of duty, what an RP needs to do and a COC needs to do. Appointment needs to be done only by the RP. Only with regard to the fees, COC can interfere. COC cannot say, I want this person or that person. It is a duty of the RP to do it. We have certain cases also on that. We can discuss about that in more detail in the upcoming slides.
Okay, thank you.
Thank you. Okay, as an RP, kindly have the details. I'm not explaining this one by then. I'll be sharing this file with you. You can just go through so that if the company has this corporate data has these sort of assets, in that case, try to take up the details. I know very well, since I'm an IP2, I know how difficult it is to get the details, but we have to try and we have to ensure we have tried and we have communicated to the COC if we couldn't get the details, that we have made an attempt and we couldn't get the details. So we have to make our documentation very clear so that we'll not end up in any problem at the later stage. For deferred tax, I have given a detailed thing. What are the information which is required? You can follow in your thing also. We'll move on to the next slide. Okay. With regard to land and building, I'll just give what is that in basic, what are the details to be given. What are the details that is required for a registered valuer and what are the details he will be more concerned about? Because if regard to land and building, if you see amenities of that land, how close it is, what are the advantage of the land being located there, and infrastructure, disposable income and affordability. Now, what is the area, in which area it is located, industrial, non-industrial, commercial, non-commercial, those things also matters. So these are the informations which is required, based on which an valuer can do his valuation. Then commercial real estate. This is why it is so whether it is close to the airport, that is an advantage, right? So we will be valuing in such a way if it is very close. So it has an extra thing. We will be having some extra premium to that thing. Demand and supply. Then whether the land has good demand for sale, that also we can be evaluated. Then recent registration and market deals in that area, any changes specifically, is that zone has been converted or something, those things we need to understand in depth to do the valuation. Restriction on transfer. Sometimes there are certain lands which has some restrictions on transfer. In case even sometimes those things also we have to see. We have to study the government regulations of that particular area. Then the next thing is how far the land in that area is scarce. Why it is scarce? Because to do a particular activity, that land could be of good value. Those things also we need to consider while doing the valuation. Similarly, for plant, we have to see the technical specification, remaining useful life and scrap. This is most important, because if you see, if the plant is good now, but it could be useful only for 3 years because it is used it has been used continuously. And this maintenance history, by maintenance history, we know with that if the maintenance cost is huge, then it requires replacement at a earlier stage. Then physical and technological obsolescence. We need to study, is there any particular machinery is taking over the current machinery? We know this one, electronic cars are going to take over the conservative cars, what is existing now. In near future, we can expect that. Similarly for gas. So everywhere we can expect some change. Is that change going to affect the concerned CD? We need to understand. Then cost of installation and commissioning, these are required to do the valuation with regard to cost approach. Then environmental license or locations, economy related, demand for the product, potential for better use and utility, specific purpose, general purpose, those things will be seen. Then coming to securities and financial assets, what are they focused on? Receivables. Receivables, if you see, this is main thing. Most of the debtors, we need to know how far we can realize the amount from them and what extent it has to be realized. If there is some work in progress, we have to see, is there any non-moving stocks, raw materials? Similarly, we should see non-moving and moving. Generally, finished goods, how do we value is that 90% down of the market value as a fair value. Because since the company is under CRP process, the product will not have the good show like the other regular company. That is a general disadvantage. If it has investment, then we have to see whether it is quoted or unquoted. Quoted is generally easy. Unquoted, we need to do some calculation to arrive at the value for unquoted investments. Then bank and cash balance. This we don't have much problem. If the amount is correct, please don't go by the balance sheet numbers. We need to get the confirmation. Based on that alone, we can take up the real number. Okay. Next thing we will see appointment of valuers by resolution professional. First thing is that process of appointment of valuer. First, as a professional, what is the thing expected from you is that you have to receive some quotation. Like purchase, when you're purchasing things, what we will do, we will inquire at 3-4 places. Same thing is applicable even for the appointment of registered valuer. Two to three quotations you can, so that you can substantiate the COC stating that these are the codes which I have received, and this is the experience of that particular person. Based on that, we can choose this one as our registered valuer. After getting the quotation, next thing alone, we need to go for the COC for fees approval. Then appointment of registered valuer will come into picture. After that, this is most important, this point to please RP ensure that you obtain non-disclosure clause agreement in the agreement which you sign. So this is very, very mandatory. Most of the people don't think this is important, but since they have the insider information of the corporate data, so it is mandatory for the resolution professional to obtain this non-disclosure agreement or clause in the agreement. Okay, because he knows what is the fair value of the company, he knows what is the liquidation value of the company, right? So he can give this information to the other persons. With that thing, they can draft their resolution plan. So here, this resolution professional has to ensure that the registered valuer maintain high degree of confidentiality. Then compliance of regulations 27. So this one we have seen to whom we have to appoint. We have seen a related party, relatives. Those people are not allowed to be appointed as the registered valuer. Kindly follow that. Then again, this last, second and the fourth, it is a responsibility of the resolution professional. Please don't get things orally, please get it documented, because we will be seeing a case where a person has get the disclosure of relationship or the consent orally and he has faced problems. So kindly ensure this non-disclosure agreement and disclosure of relationship with whom? With the corporate data. We need to ensure he doesn't have any relationship with the corporate data. For that, we have a format there which I'll be circulating. You can use that format and kindly get he doesn't have any relationship with the person whom he is going to value. That is corporate data. Okay. Now it is your duty, resolution's professional duty to share information, because you are the front face for them. You based on your information alone, they will be valuing the company. Either it is land and building, plant and machinery, or SFA. See, the first thing is that we know very well this timing matters here. I have seen multiple cases where we run back of time. Okay, here the thing is that you have to give the information to them. Based on that, he will be computing. See, as per resolution plans, what is the thing? It's a day we have. Within 135th day of the commencement of the CRP process, resolution plans to be received. Correct. So that is 135th day is there. Out of these 135 days, considering the outer limit for appointment, we have 47th day. RP needs to appoint a registered valuer. Now, what is the maximum day available for the registered valuer to do his valuation? It is 88 days, hardly 88 days. Just think all 6 valuers. If the company has all the assets, in that case, 2 + 2 + 2. So 6 valuer is required. In that case, you have to follow up with the 6 valuer to get the valuation done within 88 days. So we have to be prepared. We have to collect all information. We know we have to do this valuation. So based on your number, they will be doing. So kindly collect the required information. Then here what happens is that once you get the valuation report, can you circulate immediately to the COC? Here also you have to be very careful. After you have to circulate to the COC only after the receipt of the resolution plan. Earlier to that, they should not be aware of the fair value or the liquidation value given by the registered valuer. Here, then you have to maintain the confidentiality. It is not that RP is reporting to COC. So we have to exercise.
Ma'am, I have a question here.
Carry on.
Ma'am, is IRP liable to share the valuation reports, or he has to share only the valuation figure with the COC members?
He can share the entire report, because with the numbers, they can't know how they have valued the thing, whether they have valued it properly, whether they have considered certain things. Haven't considered, the report alone will give the full idea. What are the facts of the case? Those things will be only in the report. If we just a number, it will raise further questions.
Yeah,
So,
but many IRP don't share the full valuation report because in regulation it is not clearly written whether full valuation report is to be shared or only the valuation figure is to be shared.
okay, if full is not shared, it will raise many questions, right?
Yeah.
You
Yeah.
agree? Because if you see the valuation report, there it will be stated that what are the facts about the facts of the company, what has been given, what weightage will be there. You know, there are 3 approaches, right?
Yeah.
They, in that case, we know which approach has been given high weightage. So why high weightage to that particular report? We have to convince the people. Else now COC has a right to appoint the third valuer. It is not unnecessary time in that who is going to suffer. Only RP will be getting suffered. Okay. Every time I feel this RP is a one-man army, but he has so much responsibility. Agreed. Because we have to pull many people to meet our time, because we are the one who is pushing for the delay.
Yes.
So my thing is that you just share the report, then let them put the question, but don't share the draft report, final alone.
Okay.
Because to the RP alone, RV will be submitting the draft report. The first-hand information will be with you. You will be ensuring whether all the details required to be captured in the report have been captured. We will see that also in detail.
Right, ma'am. Thank you so much.
Then, after the receipt of the resolution plan, RP shall provide the fair value and liquidation value to every member of the committee in electronic form. On just like that, as I said, it is very confidential. He has to receive an undertaking. Please ensure you have a standard format for getting this undertaking and get it done immediately. Okay, before sharing also, you can get this undertaking, and after that, kindly share the report. Okay, else once you share the report, you have to be back of them. So first get the undertaking, then you share the report. That is always recommended. From the member, on receiving an undertaking from the member to the effect that such member shall maintain confidentiality of the fair value and liquidation value, and shall not use such value to cause undue gain or undue loss to itself or any other person. Please ensure these words are specified in the undertaking. Okay. Now we will see, we know very well with regard to CRP, there is only one way of doing the valuation. That is, we will be doing the valuation as an ongoing basis. We will be assuming the company will go in near future. But coming to liquidation, Regulation 32 states that the liquidator has an option to sell all the assets in this A to F class. This 6th class is important. See, what does it say is the liquidator can sell an asset on a standalone basis. If the company has 1,000 assets, they can sell 1 or 2 assets. So an asset on a standalone basis can be done. The second thing is the assets in a slump sale. So he can sell as an undertaking. If the company has 4 or 5 undertakings, in that case, which undertaking is so good, the people will be interested to buy that undertaking alone separately. A set of assets collectively. I may not buy the undertaking, I may buy the set of assets collectively. Together, it could be useful for me. The next category is assets in parcel. Here, it's not set of assets. It's not one particular category of asset I'm buying. I'll be buying one from furniture, one from plant and machinery. So that's what assets in parcel. Then the next thing is that in liquidation also, it is a welcome approach. The corporate data can be sold as a going concern. That is also same as CRP. Here also they have given an option. And the last category is that I'm not buying this corporate data. I'm buying the business of the corporate data as a going concern. What does it make? E and F makes a difference. Business in the sense, I don't want to take the assets. I don't want to take the liabilities. I may take the business. What is the business? If they have some software, with that software alone, are doing the business, I will take that software alone. With that thing, I will sell it through. So only I'm concerned about the business, particular business of the corporate data. Okay, so provided this they can do, we know about the security interest. So I'm not talking in depth about that one. We'll move on to the next thing. Okay, what will be the best practice in this case? So here, what is the case is that registered valuer needs to do valuation more than one category when coming to liquidation. There under CRP will be valuing only as a going concern. Here, the asset, this is based on the detail you give. You may ask, the registered valuer may need to do the valuation based on the category A, C, E. It is your responsibility to say the registered valuer in which means you want to get this valuation done with regard to liquidation. Therefore, this one, you can get the idea of the COC also, because you can't conclude there. They may want to sell it as a standalone basis. If the company has only 5 assets, they may want to sell it as a standalone basis. If they have 3 undertakings, they may say it can be sold as a 2 undertaking can be sold. They can say that one so that they realize the amount little earlier. So here comes the role of the COC. On what basis they want to sell the company under CD under liquidation. Okay. Well, this thing is that once the registered valuer gives his report, the liquidator will be considering this valuation report as arrived during the CRP for conducting the auction. As we said earlier, the liquidator can use the CRP valuation report or he can get the new one. But for going for the new one, he has to seek the advice of the security stakeholders consultation committee. After that alone, he has to seek the advice. Okay, why here advice is given is that because the question is that already a valuation has happened. In this case, as a resolution professional, you need to say why you require another valuation. You may say because there is a change in the business thing has changed, or some assets has been of no use, value has depreciated, value before arrived earlier will not hold good now. So it is the liquidator's responsibility to seek the advice of the SCC, Stakeholders Consultation Committee, and go for the new valuation. Okay. We will see, as we said earlier, the resolution professional needs to share information with registered valuer. What are the things which you need to consider? We will be seeing in few slides. Okay, we know the timing is very short. So, as I said earlier, you need to collect the information. I'll share the slide PDF. If the company has plant and machinery, you need to collect the information relating to the plant and machinery. How many plants are there? What is the year in which it has been purchased? What is its capacity? These things anyway you need to give to any registered valuer for that matter. In that case, once you are appointed, you need to keep a team, or if it is more, to get the required information. The company may have the information, but it is your thing to ensure the informations are correct, right? Because they may say in one particular case of past, what has happened is that the company said they have 1,000 assets and they haven't done any physical verification for the past 3 years. How to believe that? Really, it's a nightmare for us. Because whenever the company is in liquidation or in CRP process, what they will try to do, they'll try to give some valuable assets to settle the creditors to some extent, right? If it is operational creditor, they may welcome, at least they get something. Another thing, it in buffet that will get hold, but unless the physical verification is done, unless the books are maintained properly, we will not be able to know whether all assets are available. This is a problem for the resolution professional. Correct. Okay. The liquidator, the thing is that how do you collect information? You can collect information on the basis of information provided with the corporate data. Liquidate creditors. Creditors how come? Because financial creditors and operational creditor would have given some loan or would have given some services or provided goods based on some security. The security, now we know that is an asset of the company. Public portals, we know ROC portal is there. Then other portals also there which will help us to get the what are the assets the corporate debtor holds. See, another thing is evaluation is a continuous exercise. Why we say it is a continuous exercise? Because it is this valuation is not like other valuation. I'll give you entire details. You just go and do the valuation. Here, RP itself will come to know certain information at later stage. Okay, correct. Sometimes if you take the perfect, what will happen after perfect, some assets you will come to know that these are the assets of the CD. So this needs to be considered and it needs to be included in the estate of the CD. So now what happens? Few assets are added to the list for valuation. So this value, sometimes whenever you get additional information, you will be sharing with the registered valuer so that the valuation can be more accurate to the extent possible. Then authenticity of the valuation report depends upon the type of information shared with the registered valuer. If that is generally why we say it as input-output process. For any activity, input is correct, then output also will be correct. If input is wrong, the entire thing will go for a task. So that's why we say RP needs to give to the extent possible. I'm stressing the word to the extent possible because it is not a company which is in a proper running stage. So we will have some suspended directors will not support us. So we will be trying to get the information. So we have to ensure that whatever information we provide to the extent possible, it is accurate. Okay. Here, then one recent amendment has given by the CRP regulation in that they have said the creditor shall provide to the IRP or RP as the case may be creditor. See, by the creditor from creditor because the company's director will not provide us information. May not, I don't say should not or will not. Okay, the creditor from creditor, we can get certain information. Last valuation report, if creditor is a bank, we can get the valuation report, right? Okay, what are in that thing, we will try to get whatever information. Here we'll be lacking data. We should have some urge to get, we should ensure where we can get the required data. Stock statement, receivable statement, they would have submitted to the bank, right? They have to, because they would have submitted because they want to retain the loan. Inspection report of the properties, these also matters because they would have bank officials would have come in person to inspect the properties of the CD. Audit report, stock audit report, title search report, technical officers report, so many reports, whichever we can get, this RP and IRP can get it in preparing the information memorandum. So based on that, valuation can be conducted. Apart from that, here I have given us a list, but it is not exhaustive. These things are known to you and you would have already shared with your registered valuer in your previous assignment. MOA, AOA, annual report of the past 3 years, audited provisional statement, brief profile, past project report, valuation report. This valuation report of the past, I'm not talking about the current one. If any, certainly valuation, if the company has plant and machinery, land and building, even for stock, the reports are given then and there. So those reports also will help us to understand the company in depth. Okay, then secretarial complaints document, sanction letters, bank loan, mortgage deed, those things also will help us. So another thing to understand about the company specific thing is that we should know whether the company has any exempted tax, subsidies, those things also we need to gather and it needs to be given to the registered valuer. Now we'll move on to the next topic, accurate valuation and its impact. You people know this valuation report is used by multiple persons, right? This valuation report helps in decision making. So this report which has number needs to, from both the sides, RP needs to give a proper data and the register valuer needs to ensure he has done the valuation to the extent possible with the details in hand. So this valuation report is used by IP, COC, NCLT, and fair value, liquidation value are also used by IBBA to gauge the performance of the IBC. We know very well. We see the earlier Sarfasi was there, were there. Now also it's there. Okay. Now IBC has been given more importance. In that case, it is always this IBBI and sees that how far this IBC is succeeding in the work which has been given. Then, if you see, valuation reports reflects the value of the assets of the CD. Here, valuation reports only takes into consideration an assets, right, of the CD, ignoring the numbers stated in the financial statements. Irrespective of the numbers, what is given in the financial statement, that is fully ignored. Only the valuation report is considered because that gives a more clear value than the financial statements. So for that purpose, again, this valuation report is important. Then valuation report may create, once the report comes, we will have disputes. Certainly, FC will say, OC will say, why these people are worried? Because if the number is less, in that case, they may feel they will not be able to get their amount in full. We know there are huge haircuts. Haircut to the extent of 90% also happens. This based on the company's value. If the company has good value, then it will be taken by some other resolution applicant, and the people FC or OC can get a good number. So if the valuation report shows a lesser number, certainly it will create dispute. Then difference in facts between two valuation report. You know very well, even though you give same input to two registered valuer, the output is not one and the same. Agreed, right? Because the method, see, it is the subjective thing. The method adopted by one registered valuer, it is not necessary the other registered valuer needs to adopt the same method. Even though the same method, adopt the same method, still there will be difference. Okay, we will see what is the possible effects of undervaluation. Instead of 100 crore, I have valued it as 60 crore. So what will happen is that resolution applicant gains abnormally. Who loses? FC and OC loses. Added to that, the reputation of the valuer also goes off. A reversal scenario, overvaluation. What will happen? There is rejection of resolution plan that could have been approved. Instead of 100, the valuation has been made for 130 crores. What will happen? Here the chances of rejection is high. Then delay in liquidation process. Correct. So I know a case where the liquidation process was running for more than 3 years. Still now it is running. In that case, what has happened is that the valuation report first it started with 150 crores. Then it was reduced to 115 crores. Now 85 crores. As the time passes, the thing is that the valuation report valuer reduces a number because they feel the market is not ready to observe the earlier number. So they are forced to reduce the number. Okay, earlier, if the amount has been decided as 85 crore earlier there could have been market, earlier there could be resolution applicant for that number. You see, from 150, it has gone to 85 crores now. How much reduction has happened in over 3 years' time? Is it not huge? So always it is necessary that the register valuer need to do his work after a detailed analysis. Last thing is that the chances of lesser realization from the sale of asset due to interest from the market from stressed asset. What will happen is that the market will feel the assets, whatever we purchase through IBC is of higher value. So we should not go for it. So there could be a notion or among the investors in this regard. So if it is undervalued, also it has problem. If it overvalued, also it is problem. So it is always said we have to value to the extent possible correctly. Now we'll move to the next interesting aspect, valuation and precedent cases. See, what are the problems which has been faced with regard to valuation, wrong valuation? We have seen what is the importance of valuation a few minutes back. Now we will see because of the wrong valuation, who has suffered, what are the outcomes? We will see in the upcoming few cases. Okay. Here we will see, this is the first case. In this case, what has happened is that a third valuer has come into picture. First two valuers are there. The first valuer has given, one sec, I'll just say the case name. One sec, just give me a minute. Okay. It has happened in the case of Rana Saria Polypack Private Limited versus Uniworld Sugars Private Limited. This case was held in NCLAT, Delhi. This order has been passed on 12th April 2022. What is this case all about? This is NCLT has approved a resolution plan. From NCLT, the situation has moved to NCLAT. The resolution plan has been approved by NCLT based on third valuation report, which estimated the liquidation value as 52.69 crores. 52.69 crores. What is this number? Third valuer has come. So is there any difference between the first valuation, between the first two valuer to a significant extent to the third valuer to come into picture? We will see that in detail. This third valuer's number was 52.69 crores, which is less than half of the liquidation value of the first two valuation. This number is half of the number of the first two valuation. Now the question arises. Appointment of third valuer was not in accordance with CRP regulations. What does the CRP regulation says? Third valuer needs to be appointed only in the case of significant difference. Significant difference in liquidation value, not in the fair value. Please remember, we have to restrict significant difference only with regard to liquidation value, not with regard to fair value. What is the number which is given by the first two valuer? The first valuer has given his valuation number as 126.3 crores. And the second valuer has given his number at 121.01 crores. Right. Okay. Leading to an average of 123.66. Now you say, is the difference between 126 and 121? Is there significant differences there? No. Correct. Okay. But what has happened is that this number along with the resolution plan has been given to the COC. Okay. Now the COC request third valuation was done without any legal justification. Okay, these numbers are really closer by. And under the resolution plan, it comes with the resolution plan. In spite of that, the COC ignored that number and they made estimate. Another third person has come into picture and he has given a number 52.69 crores. That's what it is given there, just half of the original number. Okay, in this case, the question arises. But see, since the COC has approved the plan, NCLT has also approved the plan. Okay, so in this case, now who is a sufferer? Person who has given loan, right? OC is a sufferer, FC is a sufferer. Correct. Okay, in that case, what will happen? What has happened is that they say whether the procedure, what is the question arises? Whether procedure for obtaining third valuation and then considering it as a basis for deciding the payment, particularly. This has been main case for deciding the payment because we know as per section 32B, this OC needs to be paid at least a liquidation value. Okay, since the number has come down, the amount that to be given to the OC will be further less or no. Is it not defective? And it is not as per the, it's not as against the CRP regulation. It was held, yes. Okay, it is not as per the regulation of CRP. Then what was the judgment which is given by NCLAT? The third valuation report needs to be discarded. It cannot be used. And only the average of the first two liquidation report can be used. That is 123.66. NCLAT has given such an order. See now, even though the NCLT has approved the plan, after moving to NCLAT, it is nullified. This is the case with regard to Rana Saria. Then we'll move to the second case. Okay, this case has been filed by Noida Cess Authority. Okay, this case has been held by NCLAT, New Delhi. This order, 14th February, this is a recent order last year, 14th February 2022. Before going to this one, we'll just talk about this section, section 32. What does that section says? Okay, if section 30, subsection 2, class E. What does this section says? Resolution professional, that is you people, need to ensure when a resolution plan has come, resolution professional needs to ensure that whenever a resolution plan has been submitted by a resolution applicant, it should not be contravention of any law. Okay, that's one of the criteria which a resolution professional needs to ensure. Correct. Okay. This Noida Special Economic Zone Authority has submitted a claim for 6.29 crores. And it was admitted by RP. Resolution professional has admitted the amount as right. Later, NCLT by impact order allowed the application filed by the RP seeking the approval of the resolution plan and an amount. Resolution plan has been approved, and with regard to the claim of 6.29 crores submitted by Noida says he has been given 50 lakhs as was paid to the appellant as per the resolution plan. Now, this says person, okay, challenge the order. What is the thing? He said it is contravention of section 30, subsection 2, class E. Okay, what is this contravention? We will see. In 2008, land and building pertaining to the corporate data has been valued. Okay, and the price fixed, that is the reserve price fixed in 2018 was 9.18 crores. Correct. Who has valued it? Stressed Asset Stabilization Fund has valued it. Then coming to the year 2019, when it is valued by the registered valuer under IBC, he has given a number 6.10 crores. There is a vast difference in 1 year. We don't say whether the number is right. Whose number is right? 9.8, we don't know. This again 6.10, this is given by an RB. Now we will see he is saying that this number is undervalued. Only to bring down the liquidation value, the registered valuer has given a quite low number. Okay, now we will just see the fair value and the liquidation value given this particular case. Deepak Bansal, the valuer, he has given 6.21 as a fair value and 4.31 as a liquidation value. Okay. Next valuer, SK Singhal has given 5.99 and liquidation value 4.19. This has been given. Okay. Now it was held later. Okay, he has submitted his application contravention. Now it has been held by NCLAT stating these words. These words, please, these words are important because in the next case we will be seeing the same words but in other way, other mode. If you see, it was held that commercial wisdom of COC. COC has good knowledge, that is commercial wisdom. With respect to viability and financial decisions, they can take good decisions, that's what they are saying with regard to financial. Evaluating the resolution plan, they have evaluated as to prevail, whether it has to be accepted or not to accept it. Unless the plan, when it can be questioned is that unless a plan approved by the COC is in conflict of any provision of the law, and the distribution mechanism suppress the interest of the stakeholders. Okay, if it is suppressing the interest of the stakeholders, if it is in the contravention of the law, and the third category is that COC is not taking steps to maximization of the value of the assets of the corporate data. Third category. Why maximization? Because the COC has to ensure what is the maximum value he can get. That's the main thing. No, it is not to sell the CD for a lower value. He has to ensure what is the maximum amount that he can get for the CD, right? In this case alone, this resolution plan approval can be questioned. If not, the commercial wisdom of the COC is quite accepted. Judicial intervention will not be there. Okay. Additionally, in the instant case, resolution plan had been already approved a year ago. Okay, and the process has started and the resolution applicant has started doing the business. And he says, and NCLAT has said, we can't set the clock back. Okay, it appears to us the object behind prescribing such valuation process is to assist the COC to take decision on the resolution plan properly. Here in NCLAT has given the purpose of valuation is to assist the COC to take decision. Yeah, in this case, is Noida has said that the plan approved is in contravention of law. Why he is in contravention of law? In years' time, the value has come down from 9 crore to 6 crore. That's one of the main thing. Because of that, he has suffered. So he has applied. So he has made an application, but he couldn't win because they have declared that commercial wisdom of COC much to be accepted. Okay, except if he finds that this is against the provision, against the interest of the stakeholders, and against if it is not in line with the maximization of the value of the assets of the corporate data. Clear. We'll move on to the third case. Okay, this case is held at NCLAT Chennai. Dr. Periyasamy Palandi Counter versus Radhakrishnan Dharmarajan Resolution Professional Appu Hotels, Chennai. Okay, this order date is 17th February 2022. Here, the case is that this Appu Hotel has come to liquidation come to CRP process during the COVID period. That is one of the background which you people should know to understand the case much better. Okay, this appellant is none other than Dr. Periyasamy Palani. In this case, what has happened is that resolution plan has been approved. Okay, and by the NCLT. But later, this appellant has taken the case further. What is this contention? We will see in depth. The appellant objected that valuation of the corporate data. He said that valuation of the corporate data is utter violation of statutory mandates. He said it is not in line with the statutory provision. Since the valuation was undervalued, COC, because of the wrong valuation, COC was deceived into approving the resolution plan submitted by the second respondent. Since the valuation was low, there was a resolution applicant to take up the case, thereby allowing to acquire the assets of the corporate data less than 25% of the market value, less than 25% less than the market value. It has been, COC has approved the resolution plan. Okay, now this Dr. Periyasamy Palani Counter, what he has done is that he has approached, he has approached NCLAT Chennai. What is the case we will see is that this due to COVID, this registered valuer, the thing is that asset is in Chennai, Coimbatore, but the registered valuer has been appointed from Delhi. See the distance, Delhi to Chennai, from that end to this end. So in that case, what has happened is that this registered valuer, they haven't come to Chennai to physically verify the asset. Since this is a hotel thing, it has land, it has buildings, it has multiple. Appu Hotel is a chain of hotels. So it has multiple buildings. So the person hasn't come down. What does the valuation regulation says? It says that fair value and the liquidation value needs to be valued by the registered valuer after physical verification of assets of the corporate data. That is a word which is given. But here in this case, what has happened is that the registered valuer who were in Delhi, they were there itself. From there, they have done the valuation with regard to the property located in Tamil Nadu. Okay, thing is that unless we come at least once to the concerned place, we know how close it is, how proximate, what is its advantage, what are the disadvantage. Everything we can't hear by word of mouth, right? So here physically not available to verify the properties. Instead, 3 different valuation were done. The appellant submits that valuation made in the resolution plan is very low, even compared to the valuation done by the valuers. See, resolution plan has stated the amount as 423 crores. Even the liquidation value quoted by the valuer is 565 crores. Okay, while the commercial wisdom of COC cannot be questioned, we have seen in the last thing, they said the code, and Delhi has declared that commercial wisdom of COC cannot be questioned. Here, they say cannot be questioned, but we know certain things. The intention of COC should be to maximize the asset value, right? But he has proved that here the COC hasn't taken necessary steps to maximize the asset value. Considering these grounds, it is said that the resolution plan approved by NCLT is not valid. Okay, and the thing is that Dr. Periyasamy Palani Counter has won the situation. So what we understand from this case is that we need to do the fair value and liquidation value, but please ensure it is done. Ensure that registered valuer come and visit the site physically. That matters because they have strictly need to adhere to these things. Else, it will be waste of time from the point of view of the registered valuer. What will happen if the 2 valuation is not right? If it has significant difference, when you have to go to the third valuer, again, it will take time. Already 88 days alone left for you. So in that case, we have to ensure the first two valuers, to the extent possible, they come out with the number which is amicably right. We should not have vast difference. So in that case, both the people should understand the concept well. We'll move to the next case, which is India, which is held in Indian Bank versus Charu Desai. The order was passed on 6th May 2022. Here the question arises. The thing is that with regard to the first case, I missed to say one thing. Here the first case is that the COC has given an order for third valuation right. This order was passed during April 2022. During June 22, the regulation itself has been amended and they have given power to COC that they can also say that they may require a valuation. So apart from significant difference, COC now from June 2022 has been given power to ask for the third valuation if they feel they require it. So in this sort of scenarios, there could be a huge gap. Okay, see in this case, COC has been given power. If COC has been given power, then we don't know, they may go for the lesser number. Then again, cases will be running. We'll move to the next case. Okay, here what has happened is that the liquidation value attributable to the appellant financial creditor was reduced pursuant to the approval of the resolution plan based on the second valuation report. I'll explain the case in detail. What has happened is that here COC has gone for the second valuation. This is earlier, before to the passing of the amendment in the regulations. Okay, what has happened is that there is one CD, GB Global Limited. This the order for CRP was initiated on 29th September 2017. Then liquidation value on the date of CRP was found to be 307 crores. On again 2018 November, one resolution plan of Formation Textile LLC. See, the company has gone to CRP during 2017, 2018. A resolution applicant named Formation Textile LLC has given the resolution plan and it has been approved by the NCLT. The first process got over. This FLT took over the management and they controlled the affairs of the corporate data from 31st January 2019 onwards. Okay, after running the affairs of the corporate data for several months, they couldn't implement the resolution plan. There was a gap. So what does this adjudicating authority? They said they passed an order to give back the company. Which company? Corporate data, GB Global Limited to the COC. And COC in turn handed over to the RP. Now that has come back. Reversal has happened. The resolution applicant has taken the CD. Later, he couldn't implement the plan. Now what has happened? It has come back to the RP. Now, COC has unanimously taken a call. They require a valuation report needs to be done and to be obtained by resolution professional. Do you feel is that requirement of this valuation report is necessary? Because 2017 CRP was initiated, 18 over, 19 over. 19 is almost over. They were in the December. So the COC has asked for a report, valuation report. Now, this one COC member, Indian Bank, has taken the case. Okay, this is the first case of this nature. This fresh valuation is agitated for the first time this appeal. So far, it was not there in the regulation, right? There was a here. What was understood is that there was a rationale for second valuation. Since CRP process was initiated in 2017, came to an end after the approval of the resolution plan, but not implemented. Okay, the CRP was again revived. It has taken back the name of CRP back. Then FLT ran the CD for almost a year. 2019, it was in their hands. Okay, later it has again, due to the fact of the revo recent liquidation value was necessary for which COC resolved. Later, it was held that, okay, the order requested by the request which was made by the COC is correct and the valuation was accepted. and it was held in the favor of the COC. So what does here the case is that it is quite good because there is a necessity. That time that doesn't favor, and the code doesn't favor this activity, but there was a necessity. The real necessity was there to do the valuation, even though there was no such provision, no such regulation in the code or in the CRP regulation. It was accepted by the NCLAT due considering the natural justice. We'll move on to the next case. Okay, here what has happened is that okay, here are where the appellant, erstwhile promoter or director of the corporate data, challenged the sale notice and valuation report in case of the property of the corporate data under valuation. Since appellant was not able to see the case is that the promoter or the erstwhile promoter, suspended director, he was not satisfied with the valuation number. What was the thing is that the valuation number, the reserve price which was given in the notice was 52 crores. Okay, then he said it was kept at a dismal low. It was very low. And he said that the land in question, it was an industrial land, not an agricultural land. And he said the land will not fetch 52 crores. It will fetch to the extent of 100 to 120 crores. Okay, so hearing these things, the adjudicating authority, NCLAT gave an opportunity to the erstwhile director, promoter, or the appellant to place on record. Okay, you are saying this is a non-agricultural land. Okay, and you are saying it will fetch 100 to 120 crores. So considering these things, because huge difference, the NCLAT has given some time. 6 months have passed, but the appellant couldn't substantiate his claim. So what has happened is that, so 6 months, then what has happened is that the register valuer is appointed, and as per the valuation, a fresh sale notice was published. Okay, since the time passed, one more register valuer came into picture, and he has given the valuation report. Again, this ex-director or promoter questioned the valuation. Thing is that you can question a valuation, doesn't matter, but you have some concrete evidence in support of your claim. Okay, the adjudicating authority is good enough to give a time to that thing. Late, but he couldn't. Again, when a second valuation was done, again he was questioning. Questioning doesn't matter. You have to give a justification that with an evidence. Later, the case was dismissed and the appellant was charged a fee. Because of him, there was a delay of 6 months has gone. It has delayed the process, right? So considering that, there was a cost imposed on the appellant. Okay, we'll move to the next case. Here, the question is little different. Again, the case is that here, the one question is whether the adjudicating authority or the NCLT has the power to order for a valuation. They can ask, can they ask for the valuation? This is not in the act or in the not in the code, not in the regulation. Here in the particular case, adjudicating authority was not satisfied with the number which is given in the resolution plan. So he has asked for the revaluation. The question is that whether the fresh application made by the adjudicating authority is permissible. Okay, it was held in that case that the adjudicating should go further valuation. It was held that an adjudicating authority, it is open for the adjudicating authority to satisfy itself of the plan approved by the COC. Okay, he is a supervising authority of the COC resolution plan. So he has the power. A case was concluded in such a way. There is no wrong in adjudicating authority asking for the third valuation. So it is right on his path and it was very accepted. The next case is that here this case is so simple. It is for knowledge purpose alone I have given here. See, this case is of voluntary liquidation. In this case, what was the request from the appellant is that the company is going into liquidation, and they said they have limited assets, very limited assets, and no employees. Okay, and has not conducted any business or operation for the last 1 year. The company has no operation. So they said they requested that do they require valuation? Okay, his valuation is required for the company. And since there was no requirement because they don't have employees or no assets, they said it is not required, valuation is not required, and then it is relaxed from the regulatory guidelines. We'll move on to the next case. Here, this case is quite interesting. We will see here. Here is a particular specific case. This is very important case because why I say this is important case is that there are cases in support of the registered valuer. Okay, they have said they have the knowledge, they know how to do the valuation. Most of the cases in the earlier years has come in favor of the registered valuer. But here it was not in that manner. I'll explain this situation in detail. This company is the CD is of a pharmaceutical company. Valuers were appointed by the resolution professional. Well, okay. Valuer, what has happened is that the valuer appointed by the resolution professional while valuing the company hasn't given any value to the intangible assets. Okay, they have given the value as nil. Both the valuers, we don't know how the both sync together. Okay, so what has happened is that the appellant said there is an error in the valuation since an intangible asset has not been considered at all. What is the purpose of the thing is that as even the COC has approved and the resolution plan has approved, but the case is that it has taken to NCLT stating that this valuation report given by the two valuer has not considered the intangible asset. They have assigned zero value, okay, which is not correct. Because it was noted the valuer has not referred any specifics. That's what here, if you see, the valuer has to specify which method he has adopted. And he has to say why he couldn't adopt the another method. Okay. And no comparison was drawn of valuing the intangible assets of other pharmaceutical companies. See, it's always, we call it as comparison of the peers. It has to be done. The company of the same industry, what is their value they can pitch? So many calculation methodologies are there, but this valuer has missed to do. Another thing is that this valuation needs to be undertaken as per the international standard of valuation, which we will see in detail in the upcoming slides. What has to be seen with regard to this valuation? So this here, intangible value assets has been valued zero. Okay, in this case, what has the case? It was held that it was ordered that a fresh valuer needs to be appointed, not to the full extent, only to the limited extent, to value the intangibles. Okay, after considering the international standard of valuation of a pharmaceutical company. That was the scenario. It was concluded. So here, if you see as a resolution professional, you need to ensure whether the valuation has considered most important assets of that company. Here, intangible assets is important for a pharmaceutical company, right? We value, we don't think the doctors, they give importance to the brand vaccine. So what is a brand? Brand has its value, right? Which is very important, which was not considered by the registered valuer. So what has happened is that this valuation was to that extent, it was not considered, and it was separate valuation was obtained for intangible assets alone. Then it was considered together and the value was accepted. Okay. This is another case. This is with regard to private sale. Okay, before going to that thing, we will just see what is this private sale all about. When your private sale can be accepted, those things we will be seeing. What is this private sale? We know in case of liquidation, which is the most preferred approach, only auction is a preferred method approach, right? I can go for private sale. When a liquidator can go for a private sale, there are certain conditions. Only when the asset is perishable. So, and the second category is that asset, if we are holding it for the longer period, what will happen? It will reduce its realizable value. In that case, then the third category is that when we can go for private sale in the auction, the reserve, we couldn't achieve the reserve price. But there are people outside the auction, they are willing to pay more than the reserve price. In that case, we can go for the private sale. Correct? Am I right? Okay. What has happened is that here, adjudicating authority, we don't know why this adjudicating authority has taken this way. Adjudicating authority has entered into the sale process. by adopting the process of taking two bids, cannot conclude the sale of the corporate data without giving an opportunity to the liquidator to take steps for private sale. This case is against the NCLT order. Okay, here there's we'll see the case in detail. First thing, the liquidator made the announcement of auction of the assets of the corporate data. Okay, then there was no people to take up the auction. Later, Laser Solar LLP came with an offer of 50.05 crores to the liquidator to acquire the assets by way of private sale. He has not taken up the auction, but he has come by way of private sale. Okay, but the same was rejected by the liquidator. The liquidator has not accepted it because it is lower than the reserve price. And thereafter, what has happened is that the Laser Solar LLP has moved to NCLT. What is the direction which is given by adjudicating authority is that it has taken upon the private sale, directed both Laser Solar LLP and Zindel Stainless Steel to submit their respective bids under the sealed envelope before the adjudicating authority. The bids were received and opened in the open court. Laser Solar, which has quoted earlier 50.05, has given a quote for 61.05 crores. Later, and Jindal has given for 52.50 crores. Okay, adjudicating authority confirmed the sale by the private treaty in favor of the highest bidder, Laser Solar. Aggravated by the same, the appellant, who is a financial creditor of the corporate data, and also he is also holding 36% share in stakeholder consultation committee, preferred an appeal. Okay, what has happened is that the Honorable NCLAT has given an order against the adjudicating authority. It was observed that adjudicating authority adopted the process of taking two bids, could not have concluded the sale of the CD without giving opportunity to the liquidator to take steps for the private sale. So this adjudicating authority action of taking up the private sale should not be done without giving an opportunity of the liquidator. Liquidator should be given more opportunity than before AAA be stepping in. That the process adopted with adjudicating authority is not proper procedure for maximization of the assets of the corporate data. Okay, the opportunity has to be given to the liquidator to explore the problem. AAA should not take the role of the liquidator. Liquidator must explore the possibility of conducting a private sale to elicit a higher offer for the assets of the corporate data. Okay, than one given by Laser Solar LLP. This is the scenario with regard to this case. What is the thing is that, to summarize, this AA has taken the power, they has taken the private sale. Even though the bid was open in the private, it was open in open court, it was held in NCLT. This liquidator should have been given opportunity to explore the thing. Okay, so that's what the thing, it was held in favor of the financial creditor. Now, next few cases, we will be seeing that these are the cases. Next few cases, it will be revolving around the resolution professional. What mistake he has done and why he has been punished of his mistake. These few things which a registered valuer should know. It is not the thing is that we do mistake and we learn from them. We learn from others' mistake also, right? Which is more important. So when you're taking up the assignments, kindly ensure you do the correct thing and you learn from the things which should not be done. These are the don'ts. Okay, here what has happened? This is the case of Mahendra Kumar Kandawal. It is held by IBBA. What is that? MKK was appointed as an IRP for CRP process. Okay, what he has made is that he has made some CRP expenses. I will not be talking much on the other part. My session will revolve around only valuation. He has made multiple contravention, and one contravention with regard to valuation conducted by the unregistered valuer. So here what has happened is that at MKK has got valuation conducted by unregistered valuer. Okay. However, MKK submitted that it had made payments. This is with regard to CRP expenses. It has substantiated. He has substantiated himself, stating that he has made payments, which is essential, which is necessary for the continuity of the business. And the consent with regard to valuation, consent of the COC for valuation was obtained. Then, and submission made by being satisfactory, no contravention could be made out. That was a summary. We will see in depth what error he has made. MKK informed COC about the selection. Inter alia, he has selected GAA advisory as a registered valuer entity. What is this registered valuer entity? Like IPE, insolvency professional entity, here also we have registered valuer entity. Okay, in that case, there could be multiple combination of registered valuers for valuation. And he took approval of fees from whom? GAA advisory. However, in the next meeting, the attendees, that is COC attendees, were made aware that the registration of GAA advisory is pending. That means like IP, RV needs to get registration, like same thing as IP. We need to get registration as a member and we need to get the registration. A member with our institute, membership registration with IBBA. Similarly, even the registered valuer entity needs to get membership as well as registration from IBBA. Okay. So now he has come to know this registered valuer entity hasn't completed their registration process. Okay, but MKK has appointed him as the registered valuer. So they are the unregistered valuer. Okay, what has happened is that multiple queries has been raised by COC. Later MKK tried to resolve that, stating that he will get signature from the he will get only the appointment is GA advisory, but the persons who are conducting the valuation are registered with IBBA. Only RVE is not registered, but the RVE are registered. That is RV who is conducting the valuation of the CD is registered. Okay, later it has been interest of the time. Time is a major factor, right? The valuation may be continued with them. It has been said that they can continue with the valuation. However, instead of cancelling the appointment of GAA advisory, it was decided that since the individual partners of the GA advisory who are conducting the valuation are registered with IBBA, they may be continued in the interest of the time with the consent of the COC, legal and the legal counsel suggestions. It was the suggestion which was given by the IBBA. Okay, here what we understood, what we inferred from this case is that please ensure when you appoint a registered valuer, you should kindly get both the certificate, membership certificate and his registration certificate. Similarly, when you are appointing the registered valuer entity, kindly get the certificate, then issue the appointment letter. You just have it as a procedure. Please don't miss it. Don't get orally unless you see the paper on document, kindly don't accept. Okay. Here also the problem is same, but it is little different. Okay. It is slightly different from the earlier case, but still we will understand what is the issue. Where the resolution professional appointed an unregistered valuer. He is also unregistered valuer in a CRP process. Okay, as a valuer for valuation of assets of the corporate data, which is contravention of section 208. Okay, then and what is the case as he has been debarred for 3 months by the disciplinary committee to accept any assignment under the code. Correct. Okay. Now we will just see what has happened. He hasn't done in one particular case alone, he has done the error. But here he has done the error in multiple cases. Okay. Mr. Dinesh Sood submitted the valuation reports duly bearing the signature of the registered valuer who conducted the valuation report. Okay, he was the RP for multiple series. Okay, what he has done is that with regard to the valuation of Brace International Private Limited and Neo Infrastructure Private Limited, it was conducted by a registered valuer, Vijay Vinod Bhatia. Okay, having a valid registration number. Even though the valuation is conducted by Vijay Vinod, but the appointment letter has been given in the name of Crest Capital Group Private Limited. What has happened is that valuation has been conducted by a registered valuer, but the appointment letter has been given in the name of Crest Capital Group Private Limited. Similarly, again, one more case, Ujala Pumps Private Limited was conducted by Mr. Lakshya Malhotra, registered valuer. Okay, and by Miss Alpana Harij. She is also registered valuer, but appointment letter has been given in the name of Crest Capital Group Private Limited. These three registered valuers or the constituents, these people who were Vijay Vinod, Alpana Haraj, then other person, other Lakshya Malhotra, these people are the constituent of Miss Crest Capital Group. But okay, but what does the act says? We need to appoint the registered valuers. Is a Crest Capital Group is a registered valuer? No. So what has happened is the disciplinary committee, in excess of its powers under regulation 2 of IBBA, directed RP would not seek or accept any process or assignment or render any services under the code for the period of 3 months from the date of coming into force of the order. Okay, he has been barred for 3 months. So again, it is your duty to ensure we get the proper, obtain the certificate and even the declaration, because after obtaining the certificate, if he is debarred, that case also we need to ensure. So just get a certificate from him stating that he is not disqualified to act as a registered valuer. Okay. Next case is, this is quite interesting, Kavita Surana case held by IBBA. What has happened is that with regard to this case, RP had not acted independent of the COC. Okay, here the RP has acted upon the instruction of the COC. And as per the instruction of the COC, and had not done valuation of properties, and had done the valuation of the properties of the personal guarantor. First thing, before getting into the case, I'll just say, whenever valuation comes, valuation needs to be pertaining to the corporate debtor alone, not of anyone else. Here, COC has said personal guarantor's property is also to be valued. So the RP, without questioning the COC, has accepted it and added to that she has included in the CIRP cost. Okay, here what has happened is that IBBA has warned to be extremely careful, diligent, strictly as per the law, and not to repeat similar actions. Okay, this has happened in the case of Vikram Structures Private Limited. It was noted that RP acted on direction of COC by directing the valuation of the properties of the personal guarantor of the corporate debtor, along with the properties of the CD. Further, fee paid to the valuers of valuation of the such personal guarantor had been included in the insolvency resolution process of VSPL. Okay, RP did not act independent from COC by receiving payments into her personal account and making payment to the valuers for same. Again, it is not the right approach, like multiple contraventions were there in this case. Apart from this valuation, she has taken fund in her personal account, okay, and she had made payment, which is also strictly no. Okay, then it was, as said earlier, she has been warned and not to repeat similar sort of actions in future. Okay, the next case is Bhupesh Gupta. We will see what sort of error was happened in this case. Okay. Okay, here where despite his own disbelief in conducting the third valuation of the assets of the corporate debtor in liquidation, resolution commissioner permitted the conduct of same only upon the desire of the COC, thus incurred additional financial costs, and further he continued to charge the same fees as a liquidator as he was charging while he was a resolution professional. He should be warned and directed to deposit the amount which he had drawn without any authorization. First thing, here I will not, here since the case is of repeated one, I'll just say the crux of it. Here, the point which is given by IBBA is that the responsibility of the COC, which is highlighted, responsibility of the COC and IP are clearly demarcated by the code. COC must not encroach upon the role of the IP, and the IP must not be allowed to encroach upon its role. So this is the command which is given in this case. Here the third valuer has been appointed Again, now this case has been passed in April 2022. Now, June 22, COC has been given power to appoint the third valuer. So this case is not valid right now. But the thing is that here in this case, they have given that it is this COC cannot encroach the role of the IP. So here we have to be very careful. We have distinct powers. COC has distinct powers. Okay. Here in the case of Pavan Kumar Greg, here this case is a situation is that, okay, see in the CRP process, the corporate data had paid fee for conducting valuation to a person other than the registered valuer appointed by him and included the same in the CRP cost. However, later he has corrected. He was an unregistered person, later he was corrected. As the payments made to the individual registered valuers, Shoka's notice was to be disposed of without any direction against the RP. We will see the case in detail. What has happened is that whether it is a duty of the resolution professional to conduct CRP with integrity and accountability in process and to take reasonable care and diligence while performing his duties, yes, 100% is yes. Okay, the problem with regard to valuation is that where the applicant resolution professional appointed RP in CRP of the corporate data and had given the names of insolvency professionals to act as authorized representative to represent the class of home buyer in the public announcement. However, here the problem is that he failed to get the written consent, which is most essential, right? See, please don't get oral consent. Written consent alone will help us. That is one of the issue he has faced. Then other thing is that where it was alleged that RP paid fee for conducting valuation to a person other than the registered valuer appointed by him and included in the CRP cost. However, the requisite corrective steps has been taken by a RP as the payments have been made to individual registered valuers. Okay, Shoka's notice he has been issued and disposed of without any direction against RP. Here, RP was considered because when the person was appointed, he was unregistered person. But the payment, while making payment, it was made to a registered valuer. So there, corrective steps has been taken. So he has been just warned and no direction against the RP has been made in this particular case. Okay, now can we have a break for 15 minutes? Then we can take up the next part of the session. We have two more things.
Yes, ma'am.
Yeah, we have one thing is that this valuation process by RP, now we'll move into more of valuation techniques and not that detail as required by the valuer. In principle, what an RP needs to know, resolution professional needs to know, what are the in principle check you need to do. To that extent alone, I'll be taking you to. Then the next thing is that some practical issues are there, how it can be addressed. These two part is left out. Once after a break, we can join. Now the time is 3:43. We can join by 4.
Sure, ma'am.
Okay, thank you. Are you? Can we start?
Yes.
Okay, fine. Okay. Next thing is that we are going to discuss on the valuation process by RP, under CRP and liquidation. Here, as I said earlier, I'm not going to detail you what is this valuation and not much detail. As for an RP, what is required to that extent alone, I'm just going to take you to. Okay. First, the basic understanding is required. When we do business valuation, what are the things which we need to understand? That always matters, right? When I do, some objective will be there. First thing is the standards of value. Standards of value is also known as basis of value. These terms, standards of value and premises of value, kindly understand these two terms may be new to you, but this is most important because the valuation of an registered valuer revolves around the two main concepts, standards of value and premise of value. Other things are not new to you, only these two things. So we'll just make it we'll spend some time on the standards of value and premise of value. What is this standards of value or basis of value? It is a fundamental premise on which the values will be reported. That is a basis or based on which the value will be reported. We have multiple bases of value we will be discussing in the upcoming slides. Next thing is premise of value. Premise of value means in basic how the asset is used. Here how the asset is used, that's a premise of value. Then you people know the financial statement analysis we will be doing for business valuation, economic analysis, industry company. Then management interview. Why management interview is required? How strong they are, what is their capability, what problems they have faced, how they have overcome those things. Valuation approaches also we will discuss. Then the next two concept is that discount for lack of control and discount for lack of marketability. What is this discount for lack of control? We have come across the word minority. Right, minority thing is that whenever we are valuing minority shareholder, we use the concept for discount for lack of control. Why? After valuing, we will be ensuring that some discount is given with regard to lack of control because minority shareholders do not have full power. Okay, exceptional powers, we call it as exceptional powers. For that, some discount needs to be given in the valuation. Then coming to discount for lack of marketability. This, as the name says, marketability, quoted shares are valued more than the unquoted shares. Why? For that thing, if you are valuing in unquoted shares, we'll be giving some discount for lack of marketability. It cannot be readily sold. Today, I want to sell Tata, I can sell. But that is not the case with the unquoted company shares. So for that, discount will be given. Okay. Now, with regard to CRP process, valuation will be done under fair value concept and as per liquidation value concept. Right. What does it say? It needs to be computed. Valuation needs to be computed. We need to do two value, fair value and liquidation value. Must be computed in accordance with internationally accepted valuation standards. See, we have so far internationally accepted valuation standard is there, and ICAA, CA Institute has given the valuation standard, but this regulation hasn't said that the valuation needs to be, can be, or they have strictly said internationally accepted valuation standard. They are yet to bring this ICAA accepted valuation standard. It is not there. Then second thing is that after physical verification of inventory and the fixed assets, here it has to be physical verification is mandatory with regard to inventory as well as for the fixed assets of the corporate data. So this is one thing is essential. Two things. One is internationally accepted valuation standards alone. Valuation needs to be taken care. Then physical verification. We will see here. We have seen the terminology fair value and and liquidation value. We will see what is a fair value as defined in IBC, and there is no such fair value with regard to International Financial Standard, but there is market value. What does it say? We'll just see few comparison things. It's an estimated realizable value. Act or the code or the regulation hasn't defined the word realizable value. Generally, what we will think is that realizable value means what the amount we receive in hand. That means after deducting all the CRP expenses or liquidation expenses. That is a value, right? So that is realizable value. Generally, it is presumed that realizable value means after deducting CIRP cost or liquidation cost. So if it were to be exchanged on an insolvency date, exchange means if the transaction has happened at the arm's length price. What is this arm's length price? Okay, there is no difference between the sale, what I execute between the third party and my relative. I am taking the same fee for everybody. So exchanged between billing buyer and seller note. It is not that I'm making a person to buy forcefully in an arm's length price and after proper marketing. Here we have some time to do marketing. It is that marketing in the sense we are finding a resolution applicant and we are information memorandum is there where we are informing about the products. It's a sort of sale. It's like a pamphlet. When you see pamphlet, what are the things that is available like that? Our information memorandum has a thing what is a company has. So it is some sort of advertisement and where the parties are acted knowledgeably, prudently, without compulsion. They are not forced to take this transaction but because of any external pressure. This is what which is given with regard to fair value under IBC. Coming to market value, which is defined under internationally valuation standards. This is also an estimated amount for which asset or liability. Here you will have the word asset or liability, but here we can have only the assets. Why liability is not given here? Because if you see claims, liability, how it is determined? Because liability are based on the claims submitted by the FC, OC, and the other persons. Should be exchanged on the valuation date, same as billing buyer, arm's length. So this is treated equivalent. Fair value and the market value are treated at par. Okay. Here we'll just a summary of what we have seen. Fair value as per IBC and market value as per IBS 104. I'll just take you to glance what are the international valuation standards in upcoming slides. Then estimated realizable value and estimated amount. These are to be taken as same one and the same. Here with regard to IBC, we are seeing the assets of the corporate data. For with regard to market value, we will be seeing assets or liability. Corporate CRP date, valuation date. So not much difference in that. So when you are seeing this international valuation standard, we will not go for the terminology fair value, but we'll be going for the terminology market value. Okay, whatever we have seen is with regard to CRP, we will see this liquidation value. What is as per IBC and what is as per IBS? A liquidation value is the estimated realizable value of the assets of the corporate data if the corporate data were to be liquidated on the valuation commencement date. If it is going to be liquidated, what is the value? What is defined as per IBS? Here, the amount that could be realized when an asset or group of assets are sold on piecemeal basis. Here, as per IBC, we have 6 classes, right? A to F. Here, it is also in general terminology is that what is the value if the assets are sold on piecemeal individual basis. Liquidation value should take into account the cost of getting the assets into saleable condition as well as the disposal activity. While you're computing the liquidation value, what is said is that we have to bring the asset to the saleable condition. Suppose an asset is not working, we have to do the general repair work and we have to make it into the saleable condition. That value alone we need to consider, as well as the disposal activity. For selling, we will be incurring some cost. That also to be considered. Liquidation value as per IBS, they can be under 2 premises. Orderly liquidation, forced liquidation. I say this IBC under liquidation is an orderly liquidation. What is this orderly liquidation? It's going to be liquidated alone. No, okay. It is not going to go back and have new life. It is going to be liquidated, but it is an orderly liquidation. What is this orderly liquidation? Sometime With regard to IBC for liquidation, 1 year is given. Orderly time, 1 year time is given to to liquidate the company, liquidate the CD. For this next thing, we will just see international valuation standard. What does it comprises? Just a glimpse alone. Okay, IBS comprises of 5 general standards and 8 as a specific standard. Why you need to know these things is that you should know how your registered valuer is valuing the asset. Whether he is using international valuation standards or he is using some other standards or he is not using any other standard. When you see the report, kindly ensure for the word he has valued as per international valuation standard. As of now, for with regard to ICA valuation standard and international valuation standard, there are few differences. I'm not going to take that in detail. I'm just saying you for your information. The standards are classified into 2 categories. One is general standards, another thing is asset specific standards. What is this general standards? As it says, see how valuation engagement, it starts with valuation engagement. For any work to start, we require engagement. Then, as I said earlier, it does say basis of value, valuation approaches and methods, and the way how we have to report. That is also given in the standards. Coming to asset standards, as the name specifies, for each category of assets, they have given a valuation. What are those standards? We'll see names alone. Okay, then even in the general category, if it is belonging to the particular asset, we have to ensure few more provisions to be considered, few more points to be considered. These are the total 13 standards which we have as per the international valuation standards. First 5 is general, next 8 is specific. Scope, investigation and complaints, reporting, basis of value, valuation approaches and methods. Coming to specific, it talks about business and business interest, how to value a business as a whole and a business interest. Then 210 gives guidance on how to value an intangible asset. Then coming to non-financial liabilities, how to value. 220 takes care. Then inventory, plant and machinery, real estate, real property interest, development property, and the 13th category, last category is financial instrument. How financial instruments needs to be valued. Okay, now we will move to basis for value. As per international financial standards, we have 6 bases for value. What are they? One is market value, market rent, equitable value, and the next thing is synergy, liquidation value, investment value. I will just see this market value and we will be discussing more about the liquidation value. What are the other values? Why it is not considered? Since our valuation session is restricted to IBC, I will restrict myself to market value. You just know other values are there. First thing, we will know what is thing, and we will be going in detail what is relevant for us. Okay, basis of value is that the fair value is generally based on the market value, which we have seen some time back. So with regard to that, market value is an estimated amount for which an asset or liability should exchange on the valuation date between the billing buyer and the seller at arm's length after proper marketing, and the parties have acted knowledgeably, prudently, and without any compulsion. These are the things which is given here. Market value, what it is given means it is the most advantageous market. When I sell, how do I get most value for my product? So that's what is the most advantageous price reasonably obtained by the buyer. Okay, that's what market value. Market rent, it takes care of the interest in the real estate property. Equitable value between 2 parties. Here market means multiple persons. Here equitable value talks about 2 persons, how they are satisfied. So we are not going into that detail. Then synergy. Synergy, I will speak on this synergy to some extent. Synergy will not be useful for IBC. What is this synergy talks about? 1 plus 1, we know it is 2. But coming to synergy, 1 plus 1 may end up in 2.5. That means the company of it is a combination of 2 or more assets or interests, and the combined interest will be more than the original. So I get extra advantage by combining with them. So that is synergy, extra benefit I'm comparing. Since if I'm individual, I'll have some benefit. If I combine with them, their benefit, my benefit, plus together some additional benefit. That is called synergy value. Liquidation value is necessary for IBC. We have seen this one also earlier, piecemeal basis. Liquidation value, it takes into account the cost of getting the asset in the saleable condition as well as those of disposable value. One is orderly liquidation and another is forced liquidation. Investment value is entity specific. So basis for value has 6 values. We will be more concerned with market value, and the last category is liquidation value. This is basis for value. What is this basis of value? I'll just say that there's a fundamental premise on which the reports will be based. This is the start point of any reporting. So first thing, fair value and liquidation value. For CRP process, it is based on that alone, right? Coming to liquidation, it is based on liquidation, but we have seen the 6 classes, A to F. Okay, as a valuer, you are supposed to give with regard to CRP, there is no much detail required with regard to basis, because as per the regulation, it has to be fair value as well as liquidation value. Coming to liquidation category, okay, liquidation of a for CD, we have 6 categories. It is whose responsibilities RP in line with COC's responsibility to say under which method it has to be valued. Okay, now we'll move on to the next concept, premise of value. First thing, basis, then premise. So premise of value describes us the circumstances how an asset or liability is used. Okay, how an asset or liability is used. Different bases of value may require particular premises. We have different bases. We have seen multiple bases, right? 6 bases we have seen. They may require a particular premises of what we are going to say now, or it could be multiple premises. One basis versus multiple premise, or one basis versus one premises could be there. What the premise, the very most important thing is highest and best use. Okay, and the highest and best use is the case, it's a participant's perspective. Okay, how do I get a highest value for an asset? Although the concept is most frequently applied for non-financial asset, as many financial assets do not have alternate uses. I'll explain this in detail. Okay, I have a land. This, for example, we'll take it this way. The CD has a land, which is in the heart of the city, which was used for industrial purpose. It is an industrial area, so it was used for the industrial purpose. Now, that industry is not doing good. Okay. And because of other congestion and other city development, it will not be easy for them to bring the raw materials. So if that land is used for another purpose, for data, mall, it would fetch high value, right? Same land. When it is used for, earlier it was used for industrial purpose. Now there is now it can be used even for other purpose. What is that? It could be for mall data. In that case, I'm getting the same land, but I'm getting different benefit. That is one thing. Other way to look at the highest and best use is that there could be assets in the company. The company would hold land. Okay, but it is not used. Like investment, they would have hold. Well, valuing that could be if I can use that land for multiple purposes. The land, I will be ensuring which, if what basis the land, if which purpose will help us to give the highest and best use, we have to make a judgment. Then current and existing use. Highest and best use, what is the best I can do with my property? This current and existing use, leave about this best and highest and best use. What is what? What purpose I'm using them? Same purpose my value needs to be. So RP needs to say how do they want it, same existing. The company will be continuing with it. If it is fair value, then in that case they will have to see whether the company wants to make the use of the property and its highest and best use, or current use and existing use. It has to be given by the RP in consultation with COC, so that the valuation could go in a proper direction. Then orderly liquidation. As I said earlier, IBC is, we can say it as an orderly liquidation most of the cases. Sometimes it is forced liquidation, will come out later. Okay, orderly liquidation is the value of a group of assets that could be realized in liquidation sale. A reasonable period of time to find a purchaser, with the seller being compelled to sell. Here CD don't have option, he is forced to sell, correct? He don't have, even though he may be willing to run the business, but he don't have option. Okay, seller is compelled to sell, on as is various basis, as it is. That is what we call it as it is various basis. Okay, here we don't use the concept of highest and best use. You just sell as it is. That's what it means. The reasonable period of time to find the purchaser may vary by asset and market condition. See, orderly liquidation we are saying 1 year could be an orderly liquidation or forced liquidation based on the asset involved. That is a major thing. It could be huge company. In that case, 1 year could not be sufficient. In that case, it could be forced sale or forced liquidation. Okay, the first is often used in some way the seller. Here also the seller is under compulsion. No, for him, no say. Okay, with a proper marketing is not possible because we are forced. It has to be sold immediately. Buyer are not able to take other pay. The seller don't have. The seller is under compulsion to sell and the buyer cannot take adequate due diligence. If you buy today, you will be getting at 40 crore. That's it. So the buyer may not have time to do proper due diligence and it may end up in other way also. It could be positive, it could be negative. We can't say all forced sale will be negative. The price that could be obtained in these circumstances will depend upon the nature of pressure on the seller and reason why proper marketing cannot be undertaken. Could be he's under huge pressure that he has to sell to settle the loan. We'll move on to the next one, entity-specific factors. This I'm not detailing, just for your understandings. There are certain things, entity-specific. Entity-specific to make it short, but what is the thing? I have a huge land where I'm running my factory. If I want expansion, I can buy a near land next to my factory so that I can expand. So in that case, I may be ready to pay higher amount to buy that land. This is exclusively for me. For me, that land has value. For the other person, it could not have value like me. Okay, since I felt my business is growing, I want expansion, so I take it. So it is specific. It is specific to me. It is not specific to everybody. It is not common to everybody. Synergy. Here also, even in the premises of value, synergy is there. So the person will get synergy benefit, then it has to be considered. Now we'll move to the next important topic, valuation. See, valuation, if you see, there are 4-5 categories on basis of which valuation needs to be done. One is enterprise value, total investment capital value, operating value, equity value. We will see. See, here, valuer needs to value the company based on equity value or enterprise value. He has to do the valuation based on the enterprise value. What does this? First, we will understand enterprise value and equity value before understanding the other two. The first thing is enterprise value. What is this enterprise value? What does it include? Total equity of the business, total debt of the business minus cash and cash equivalents. Okay, available to meet those liabilities. Okay, in that case, what does it mean is that enterprise value means I'm valuing the company. The company's capital structure can comprise of equity and debt or only equity, right? In that case, what does the enterprise means? I'm valuing the company. I'm not valuing for the equity shareholders. So the enterprise value, total value of the equity plus debt and debt related liabilities minus cash. Okay, cash is excluded by doing the enterprise value because it is unused as of the valuation date. Coming to equity, we'll go back later. Value of the business to all its equity shareholders. Here, I'm restricting. I'm not taking enterprise as a whole, company as a whole. I'm taking only what is for equity shareholders, what is available. Okay, next two terminologies, we'll see total invested capital value, the total amount of money currently invested in the business, regardless of the source. So here I'm investing total capital. It's similar to enterprise value. This amount I could have invested, could comprises of equity, could comprises of debt. Okay, so what amount I have invested, that alone matters. This loan could be long-term, short-term, doesn't matter. Okay. The next thing is operating value. I'm not seeing entire value of the business. I'm seeing only the operating value. Operating value means I'm not considering non-operating assets and liabilities. Ignoring that, I'm valuing the company. Okay, this enterprise value and equity value we have seen earlier. To summarize, enterprise value is nothing but equity value plus total debt minus cash. Okay, so this valuation, IBC valuation is done as an enterprise value, not as an equity value, because it is not valued to give the shareholders. It is valued to give how much it can be given to the debt, given to the person, given to the can be given to the creditors. Okay. As I said earlier, multiple times, just a recap alone, under CRP process, valuation is done as a going concern, fair value and liquidation value. Liquidation value is done for a CRP process. The reason is being that to have a floor price. Coming to liquidation value, 6 scenarios needs to be considered, and not every 6 scenario is required for particular valuation. It is again, you people need to decide which sort of valuation is required. Standalone basis, slum sale, sale of assets collectively, parcel, assets and parcel, going concern are the business of the corporate debtor as a going concern. Okay, for this valuation process, resolution professional needs to understand the type of assets, land and building, plant and machinery, securities and financial assets, type of industry, business. These are the things, basic background thing which a resolution professional should understand before giving the work to the registered valuer. Fine. Okay. Understanding key information and limitations we have seen earlier. So I'm just moving to the next one. Okay, valuation process, if you see, once the details are received from the registered valuer, it is not right on the part of the registered valuer to go with the data what has been received from the resolution professional. What he needs to do, he has to do the due diligence. See, it is as one of the mandatory requirement of the registered valuer is that he needs to do a basic investigation. Is a number provided, whether it is right or it requires some corrections, or it requires more corrections, or the number is completely wrong. He has to do a due diligence. Okay, he has to spend some time on due diligence. So he will be inquiring you on the correctness of the number. Then before doing that, he should have sufficient evidence must be assembled by means of inspection, inquiry, computation. Once he gives you some numbers, for example, I'll just take, if the company is giving projection needs to be given for 5 years. For the 5 years, in that case, if the company is making a projection stating that they will be able to achieve enormous profit, or the EBIT or EBITDA will be higher when compared to the previous year, it is always questionable, right? How can a company, what event has happened, and the company can get huge change in EBIT when compared to previous year? So there is an analysis is required. So professional judgment is whenever certain details are received. In that case, we need to ensure how far I can justify this number. Okay, we generally call it as observable and non-observable inputs. We'll discuss that also in detail. When the valuation assignment involves reliance on information supplied by other party other than the registered valuer, again, in registered valuer, consideration should be given as to whether the information is credible, or that information may be whether to rely on it or not to rely on it. It is a management's call. Okay, in case it is not supported, it is better to ignore such information. We will see, you people know very well, you people know what are the valuation approaches and methods. This approaches, mainly 3 approaches: market approach, income approach, cost approach. Then we'll see one more approach also. It is nothing but the combination of market, income and cost approach. Market approach, we have market value, exactly you can take from the market, or comparable company or comparable transaction. Then income approach, capitalization of earnings method, discount, cash flow method. Cost approach, replacement, reproduction. I'm not taking these things in detail. I have attached, I'll be sharing this file with you, which comprises what are the method, sub-method, and when can we use this method. Okay, these things you can, and you can read and you can observe. Here, for example, market approach, we have 3 methods. Okay, market price, comparable company, comparable transactions. For this comparable company and comparable transaction, there could be sub-method. That is, when can we use PE method? When can we use price by book method, EV by EBITDA, dividend yield? Okay, BE method can be used when the profit making company is making profit making business and growing steadily. For example, software, technology, insurance company can use this method. Then praise by book method, profit making company and growing steadily. Banks, okay, NBFC will be using this method, praise and book method. EV by EBITDA, enterprise value by EBITDA. Okay, when a company can use this method during initial years, generally what will happen, we will have long time to recover the cost and the high cost of debt. In that case, we can use this method, enterprise value divided by EBITDA. E-commerce players, they are taking, Flipkart, Amazon, those people are doing wonders, but the case is that they are making still loss. They have to grow, they have to wait for further more period to reap the real profit. Telecom players, retailers, then dividend yield. When the company gives dividend, really you people know it better than me. What is the case is that when the company feels that, okay, plowing back the profits to the company instead of retaining the profits, the profits can be given to the shareholders. Okay, public utilities, oil marketing companies, those companies we can now adopt yield approach. Then income approach we have given. Then there is something called, these are the methods which is applicable for intangible assets. Kindly ensure whenever intangible assets are there, like one case which we have seen for pharmaceutical, and generally ensure whether the intangible needs to be valued. If it needs to be valued, there are three main methods. One is relief from royalty. And next method is multiple period excess earning method. That is also there. That is, we call it as mean. Okay, with or without method. This method are suitable for specific intangibles. When the registered valuer is doing this valuation, kindly ensure whether he has adopted the proper valuation. Kindly ensure why, just check with him, just try to understand why this method is adopted, why not this method. If you know the basic thing, you can start questioning. It is not that thing, everything we know. We can learn. Okay, then another thing is option pricing models. It is generally used for derivatives. Okay.
Excuse me, ma'am.
Yeah.
What about goodwill, ma'am? How will the goodwill be to be valued?
Goodwill we can take, it's an intangible, right? We can go with or without method, we can go.
Okay.
With or without method means without goodwill. Say if, for example, if the company is new, Pepsi, we can take it. It has its own goodwill, right? Self-generated goodwill. So if it is not, if you can say Coca-Cola, Pepsi, we can take it. See, there are other brands which don't have any brand. For them, that is without that brand, some profit will be there. With that brand, profit will be there. So what we'll do is that first, without profit, what is the flow? Then with the brand, we have to value. Then the difference between we can be taken as a goodwill thing.
Understood, ma'am. Fair enough. Thank you.
Okay. Then when asset-based approach is the residual thing, but it is also quite well accepted. We will see an example. Replacement cost, reproduction cost. Replacement cost is the thing. If I replace the thing, if I'm replacing the product, for example, if I want to replace my computer, can I get my same computer? No. There will be some additional benefits, right? I would have purchased my laptops 3 years back. Now if I purchase, can I get the same thing? Certainly, it will have further advantages. So that is replacement. I'm replacing my laptop alone, but with further advantages. Then what? Then reproduction method is there. I am reproducing this laptop with this configuration itself. That is reproduction. Then adjusted book value. This is fair value. Then adjusted net asset value is also quite accepted. What is the difference between adjusted book value and adjusted net asset value? In this case, what has happened is that certain assets like land, I will not take it as a book value. We will be taking it at the fair value of the land, fair value of the building, fair value of the investments. Even in the asset approach, we will be adopting the fair values. Generally, asset approach is adopted for the capital intensive industries. For example, if you see steel, cement, if you would have come across this Bhushan Steel Biney Cement, this company, while they are in valuation, while they are under IBC, replacement cost approach has been most widely used. Okay. Then another category is that sum of total parts. What is this? Is it the new approach? No. It is, the thing is that this approach has a combination of earlier traditional approach in market, income, asset. Okay, why does I have to use this method? Because, for example, if you take Reliance Industry, they would have invested in oil, gas, refinery, marketing, multiple things, right? One method will not be suitable for all. So in that case, I'll be using cost method, one I'll be using income approach. So even for particular thing, I may use all three approach and I may give weightages. That is also matters. Again, this sum of total parts approach can be used for holding companies. A holding company may have multiple subsidiaries, and the subsidiaries may be in different vertical, or it may be in same different vertical or in the same category. In that case also, sum of total parts approach can be adopted. We'll go back to the presentation. Okay. Here, I'm just given a small example. We have taken, this is done by our company, then valuation. Here, what we have done is that value has been determined based on cost approach for Adani Power and Tata Power. Adani Power has coal and solar. What is a megawatt? Coal megawatt? Coal capacity is at 13,610 megawatt. And to replace the same, if I want to bring it the same, say megawatt now, what will be the cost? 81,000, somewhere around 81,660. Apart from coal, Adani has solar also. In that case, it comes to solar comes to 250 crores. Then this two has to be added. They have certain work in progress. That has been considered. So the enterprise value comes to 93,460. We have to reduce the debt, add the cash to arrive at the equity value. On the date of valuation, the present value is that is market capitalization for Adani Power is 56,562 crores. And the market price per share was 146 rupees. But fair market value is 130, but the computation as per this thing comes to 146 rupees. So if you see this, as per this cost approach, because Adani Power is a capital intensive, so the approach adopted here is cost approach. And if you see the market value between value as per cost approach and the present market thing is listed thing is that 146 versus 130. Okay. So, but here in this cost approach, there are certain, it has its own drawbacks. So since it is a capital intensive industry, thing is that all the machinery will not have same useful life. Certain machineries will have 10 years life, certain machineries have 20 years life. So for that also we need to give the correction here. So if you take cost approach, please don't take just like that. We have to see, we have to bring all the asset under valuation to one particular period, 20 years or 30 years. We need to consider it here. Then Tata Power, apart from coal, they have solar, wind, hydro, waste heat. So many things are there. So enterprise value is 92. Work in progress has been considered. Enterprise value has been added. Debt needs to be deducted. Cash on hand, we need to add. Investment is there. Then equity valuation has been added. For this Tata Power, it is 67,377 crores. What is present market capitalization? It is 64. So as per this value, it is little higher. The present market price is 202. Fair market value as per this method is 210. So this is for your for understanding I have given here. We'll move on to the valuation approach for IBC. IBC, if you see registered valuers, it is registered valuers option. He can choose one method or he can choose multiple method. Okay, it is not necessary. We have to choose more than method. If he has a high degree of confidence and accuracy by using one single method, he can very well do that one. Okay, it will not be questioned at all. Only thing is that he should say why another method cannot be, if we make market approach, why cost cannot be used, why income cannot be used. So he should have some justification. While giving the report, he has to say why this method is chosen, why not other method. Kindly ensure he has given a detail so that you also understand why the other method has not been chosen. Okay, then the another word, observable input, non-observable input. Generally, when valuation is done, we need to give more importance to the observable inputs. What is this observable? That is, we observe the data from the market. Okay, from the data which is already available. Non-observable means something estimated. So we have to give, while doing valuation, weightage needs to be given to observable more than non-observable. When more than one approach or methods are used, or even multiple methods within single approach are used, conclusion value based on those multiple approaches or methods should be reasonable. Okay, that's what it is said, that when I can choose many methods, but I should be able to justify my call. That justification kindly ensure whether your registered valuer has provided in the report. Now we'll move on to the last session, which is most important, practical issues and recommendations for the art. Okay, here we will be seeing practical issues and recommendations. First, okay, what are the steps that an IP should undertake to assess the reasonable cost and suitability of the valuer with respect to size and nature of the asset of the CD? First thing, it is the thing, how do you choose an RV? That is the first thing. How an IP to choose an RV? How will you choose? First thing, we need to know what is his experience. Okay, as a registered valuer in the valuation industry. Then whether the person has or has done valuation in the same category, same industry. Suppose I'm going to value my CD is in real estate sector. We can even check whether the registered valuer has exposure in valuing real estate sector in earlier experience. Okay, then we need to see the code. Okay, then code submitted by the registered valuer in conjunction with above points. Code versus A and B is required. Okay, while analyzing the code, where weightage needs to be given more. Okay, when analyzing the code, more weightage can be given to the valuers who has already done the valuation of the CD. Why such thing is given? Because of a CD, if a registered valuer who has already valued the CD, okay, he has more knowledge about the CD. In this case, what has happened is that, for example, he would have valued the company for loan purpose. Now, if the same registered valuer is available, then in the case, okay, he can do the valuation so that it is easy for him to do the valuation because he has more knowledge about the CD. So more weightage is as recommended to give more weightage to that registered valuer. More often it is not possible, but one of the thing you can have it as a thing. If you are able to get that person, well and good. If not, next option alone we need to explore. Then second practical issue is that in liquidation, we have seen this one earlier, whether fresh valuation needs to be obtained by the liquidator in case it is already done by the CRP. We can skip here because we know very well it is at the option of the liquidator, but he has to get the consultation with the stakeholders consultation committee, and if he feels it is required, okay, in that case he can do, because he may think there could be substantial change in the assets with regard when compared to CRP period. If instead of 330 days, it could have taken much longer period. Even during the 330 days period also, there could be major change in the government. For example, plastic, if you say plastic would had value. Once the government has passed an order, plastic has come to an, and it's, I don't say nil, it has slowed down. So accordingly, the valuation needs to be changed. Similarly, if there is any government rule comes which changes this industry's future thing, in that case, very well, we can go for the valuation during liquidation period. Okay. See, but this is for mainly for IP. What is your responsibility? Okay, what precautions should an IP consider while accepting the valuation report? Here, valuation report, it is done by the registered valuer. What as an IP you need to do? See, first thing is that you need to ensure all the assets in the sense land and building, plant and machinery, SFA. Okay, so as to maximize the value of the assets of the CD under CRP can be realized. It has been covered. That's the first point. Okay. And its IP needs to ensure all the details pertaining to related party are adequately captured in the valuation report. That one we need to ensure. IP should ensure that valuation reports here alone, the recommendation part alone, they have given ICAI. But as per the code, they have given only internationally accepted valuation standards. Okay. So, because since this is recommendation alone, so it is always better to do the valuation as per internationally accepted valuation standards. Next category is that, as I said earlier, IP should ensure the methodology, which methodology, process, assumptions are appropriately applied for the corporate data. Okay, we have to, that's what is the assumptions, why he has taken this call, those things you have to speak in detail with him to understand and whether your interpretation and his understanding is one and the same. Sometimes you think if the company has all three assets, that is land and building, plant and machinery, and SFA, in that case, you have to speak with 6 valuers, right? 6 persons, each asset 2 categories. So 6 assets, 6 valuers are required. In that case, if to every person you need to explain. In that case, it is recommended you just go for the RVE, registered valuer entity, where it has a combination of all 3, so that you can give an explanation in one. So you'll be choosing 2 RVE. So where they can do entire thing, so you can reduce your problem to some extent, so that your communication can be, for you, it is easy to follow. Okay, then next question is on the validity of the valuation report. Okay, earlier in between what has happened is that code has amended that regulation, not the code, regulation has amended the valuation report needs to be obtained every 6 months. Later, they have removed that. So now it is at the discretion of the RP, that is you people, to decide whether valuation needs to be obtained or not. Then, okay. This one, can COC members call for fresh valuation in case of revival of CRP, which we have seen in the case of Indian Bank versus Charu Desai. Okay, it can be done. That is agreed. Okay, it is very well accepted. Then disclaimer. The disclaimer is a call which every registered valuer used to put at the end of the report. By disclaiming, can I be relieved of my responsibility? No. See, disclaimer cannot be given for each and everything. Disclaimer can be accepted only for few things, that details they have given. Okay, disclaimer, I can disclaim for the documentation for which I haven't received. Details have not been provided. For that, I can, as an RP, I can disclaim. Okay, also, you people can accept the disclaimer limitations which are out. If it is not in the scope, in that case also, whatever in the scope alone will be covered by the RV, correct? Then the last disclaimer which is accepted can be, which is agreed upon the scope, which are agreed as the scope of work of the valuer at the time of appointment of the valuer, which are agreed upon as a scope of the, may also accept the disclaimer or limitations which are agreed upon as a scope of work at the time of appointment of the valuer. Okay. See, first thing is that, again, here I can't just give a report and I can't change a number. So valuer, registered valuer, while giving a report to the resolution professional, if I say it is 100 per share, 100, in this case, for example, 100, or if I'm giving it was 52 crores, then can I change it later, giving 70 crores, 80 crores? Okay, is it possible? Just like that, I can't do that. No, when it can be done? When the registered valuer has received additional data, when there are change in circumstances, assumption needs to be reconsidered. Okay, additional information has been made that has made to change in the methodology from an income approach, I have to move to market approach, or income approach to cost approach, anything it can be. Okay, later, first thing is that the company has initially, for example, assumed as a going concern. Later, assumption change. In that case also, the draft, it can draft number and the final number can change. Only specific numbers. It's not in all cases. We can't ask them to give 10 different valuation number. Okay. Now, can an RP or COC interfere in the valuation exercise? Like RP, registered valuer is also an independent person. RP can communicate what he needs to do. That is, communicate exactly what is the situation, what are the information he needs to provide for valuation. He can provide for the registered valuer. Over and above, he doesn't have power to interfere in the valuation exercise or COC. He will be acting independently. The valuer will be acting independently without influence of any stakeholder. Okay. Then, okay. First thing is that what kind of intervention? First thing they said not to interfere. Then what kind of intervention is permissible by the user for determination of value by two registered valuer without interfering the independent status of the valuer? We will see here. If the RP is of the opinion, the value of an asset when valued in isolation by the registered valuer will be impacted due to the lack of understanding from RP, then in that scenario, RP can intervene without interfering the independency of the registered valuer. What does it mean is that here the scenario, it's a thing is that RV, registered valuer, cannot do the valuation on isolation because it is of such complicated case that RP's intervention is required for his understanding, not for choosing the method, another thing. So he has to go hand in hand because of the complexity involved in the business of the CD. In that case, he can intervene. Okay. Next thing is that whether valuation report can be shared with management, ex-management. As we have seen earlier, they can participate in the COC, but they don't have a right to vote. Correct. Okay. Along with the resolution plan and along with the resolution plan, the registered valuer report containing fair value and liquidation value can be shared with the ex-management, not earlier. Okay. What should be the basis or method for valuation of assets mentioned here? Basis method. So first thing is that we will see for certain category what sort of method needs to be adopted. Avoidance application filed by the user. Avoidance application can be filed by the RP under section 66. Where the RP found that the CD has been carried on. Section 66, as you people know, it is one of the pocket section, fraud. Okay, when the RP comes to know, okay, this business is undertaken to defraud the creditors and for any fraudulent transactions has already taken place. If the RP has concluded such situation has happened, in that case, valuer should independently conduct the valuation of such transactions and highlight the facts of the respective transaction. Here, apart from regular thing, he can, if he is fraud, he can step into that and he can value that independently. That is one thing. Okay, in case of fraud and defraud, the creditors was the intention of the CD. Okay, then coming to special assets like jewelry, diamond, aircraft. Here they have given a standard thing. We can go by the market approach. Similarly, shares. We have to see quoted or unquoted. Quoted market is there. Unquoted, we need to value it. Okay. Then valuation of minority interest, controlling interest of downstream companies. Okay. Here, what is stated is that if we have financial statements are there, in that case, fair value can be determined. When the financial statements are not available, then we have to go with the book value. Okay, we'll move to the next thing. This contravention we have seen. When we are valuing, we should value only the corporate debtors asset, not the personal guarantors asset. This was the case with regard to Kavita Surana's thing, where it was warned, where the RP was resolution professional was warned, and it is advised not to take up this sort of situation. This sort of scenario should not come in future. Okay. Fine. The next case is that how should the valuer deal in the increase in scope of work? This can happen, right? When a registered valuer is appointed, he or she will be given some scope of work. This scope can be enhanced. How it can be enhanced? Because we know the assets of the value of the CD. Later, assets can change, right? this RP, while conducting the business, he can come to know there are certain assets of the CD lying on third party's place and which is not captured in the books of accounts of the CD. In that case, it now assets have added. So when the assets are added, eventually what will happen is that the register valuer will do the valuation, but he can increase the scope of work. Okay, we'll move to the next issue. The company has already been valued under CRP. However, it wishes to value again under liquidation. Can the same valuer issue the fresh valuation? Earlier, it is permitted. Liquidation, we can do valuation. Now the question is that, is it the same valuer needs to do or it is new valuer needs to do? CRP, one valuer would have done. Liquidation, same valuer needs to be done. It is recommended approach is that you just appoint the new valuer. That is what it is recommended. Then next question is that a valuer be registered as valuer for all class. Okay, a person can be a the question is that, can he do land and building? Can he do plant and machinery? Can he do SFA? The question is that as a registered valuer, we can do for all categories can be done. Only thing is that we should have passed the examination and we should have obtained the membership and registration. Fine. Next thing, sometimes it happens is that a subsidiary, a holding company will be there, which is under insolvency. This company may have subsidiary. In that case, do I need to value the subsidiary? Yes, because subsidiary, I hold more than 50% shares in that thing. So this is my asset, right? So when the person is investing, they will be valuing this asset also my asset. So in that case, it is recommended that value of the subsidiary needs to be valued separately. Okay. Then we'll move on to the next thing. This inventory problem we have seen earlier also. Under whose thing it will come, inventory valuation, whether it will be SFA or plant and machinery. It needs to be decided on case-to-case basis by the registered resolution professional in consultation with the registered valuer. Okay, then first thing is what is the difference in value? Whether difference in value has to be ascertained at consolidated level or class level or asset level. What is this question talks about? We have seen when there is a significant difference, right? When the significant difference, we have to see all valuation as a whole or at class level or asset level. If you see the regulation, it would have given that at the asset level, land and building separately, plant and machinery separately, SFA separately. For each asset class, we have to see with respect to liquidation value alone, not with respect to fair value. Okay, now 19th question talks about, see, the registered value is there. This registered value would have valued the company before CRP and during CRP. In this case, before CRP, he would have given better value. Now the value would have been reduced. Is in that scenario whether the registered valuer will be penalized? No, because before CRP period, the situation was good. During CRP period, it is bad. So there are certain justifications. So he will not be penalized. Next question is that whether and when the valuation reports or figures to be shared with COC members. As we discussed this point earlier, on receipt of resolution plan, along with the resolution plan, this valuation report of the registered valuer, which comprises fair value and liquidation value, can be shared with the COC. Correct? Okay. How to assess the value of the asset? Pardon? Hello? Okay. How to assess the value of the assets when the financial statement for the cutoff date is not available? Okay. For the latest financial statements before the cutoff date, we know this. If suppose it is on 11th October, we will not have any financial statements, right? So in that case, what is the thing is that if the company has proper books of accounts, then it is not an issue alone. It's not an issue at all. But in that case, what we have to do is that we have to take the prior financial statements. That could be the cutoff date. Okay. The next thing is that if a registered resolution professional appoints same valuer for 4 consecutive assignments, is it correct? Okay. This may lead to the assumption these people, this registered valuer and the resolution professional are working together. To that extent possible, keep on repeating the same registered valuer can be modified then and there. Okay. These are the things from my side. Whatever queries you have, you can ask. Hello. If you have
I have one question to ask.
okay.
Suppose there is a land belonging to a corporate debtor.
Land
which-
belonging to a
land, a piece
Yeah.
of, and it was the only piece of land belonging to the corporate debtor under insolvency. So what has happened? What is this land got transferred for a very minimal consideration? So I thought it is a avoidable transaction, and I have said that it is a fraudulent transaction, and I applied to AA. Declare it as a fraudulent transaction, right? So do I need to get that land valued as well, because we are not sure whether it will finally, what will be the outcome of the AA, whether we'll win that case or not. So then also should we get it done the valuation?
Okay. The first thing is that when you have taken the CRP process, land was only the asset. Or during when you have taken the asset itself, there was no land. When you have taken the CRP process itself, the company doesn't have land.
It was actually transferred.
When it was transferred before the insolvency commencement.
Before the CISB.
So your case is not when the insolvency commencement date, on insolvency commencement date, asset is not in the books of the company, correct?
Right.
So in your case, it is not required. What the approach you have adopted is that you have understood this seems to be a fraudulent transaction. So
Yeah.
you have moved to the AA, then it is from AA to take the call. There it is not said when it has to be on the asset, it should be as a part of the asset on the balance sheet date, on the insolvency commencement date. Since it was not there, valuation is not required for you.
Okay, ma'am. Thank you so much.
Thank you. Anyone else?
Hello, madam. I'm Pradeep Saman.
Okay.
See, I want to ask, suppose you said that regarding marketability, and suppose agricultural land is not marketable. So is it possible that AA will grant valuation less than liquidation value?
Why do you say agricultural land is not marketable?
Because it is in Adivasi area where a lot of problems are there.
Okay.
Even certain murders were happened there earlier, and no one was willing to purchase it. So, is it possible that it will get price less than liquidation value, and AA will allow it?
100% it will be allowed. You have the answer to the question also, sir, because see the list, this value, see we can say this has some market value, even the guideline value, stamp duty value will be there. But here the risk, the people will not be ready to buy the land, right? Because they are scared of their life. So certainly you can have a reduced price and you can have a justification for that. It will be accepted, sir.
Okay. Thanks.
Okay. Then we end the session. If you have any doubts, I have shared my mail ID. You can ask me. Okay. Thank you, everyone. Thank you so much.
Thank you.
Thank you, ma'am. Thank you. It was good session actually. Yes. Thank you.
Thank you so much, ma'am. On the behalf of ICSI's entire team, I would thank you for taking up this session and taking out time for today's workshop. I hope that everyone has learned from this session, and very happy Women's Day to you, ma'am.
Thank you.
Thank you, everyone. And I will share the PPT once I receive it from ma'am. I will share it with everyone. Thank you so much, ma'am, and thanks to
Thank
everyone.
you.
Thanks.